Hello, welcome to another live stream with me, Christian Rauchenwald, on this Monday morning. I hope you all had a great weekend. I assume some of you are already excited because you followed the pre-market updates or prices for GameStop. Usually we are starting the streams half an hour later today because GameStop is starting a little bit early. Just need a minute. I'm just noticing that my camera is misbehaving a little bit. Just a second. There we go, and the other one, double checking as well. Yeah, before we jump into everything, as always, let's get the usual disclaimer out of the way that you can also see at the bottom of the screen. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Now, with that out of the way, for those of you that don't know me, I'm Christian Rauchenwald. I used to be a popular investor on eToro. I know the channel branding still hasn't been updated since I left the popular investor program. I also actually started this YouTube channel around in January or maybe after January 2021, after or during GameStop's first rally upwards. And I've been starting to publish again recently since I have again more time for trading. And just as it happens, GameStop has been having some recent interesting movements. I'm gonna switch here in a second. Up there we go, and hide that. And there we go. Yeah, so we see that GameStop during pre-market hours already shot up. The reason for that can be found on Superstunk. If we go to Superstunk, because Deep Fucking Value, the guy that published the original due diligence on GameStop, shared his reasoned position. Now there was a lot of not frenzy, but a lot of things during the last couple of years that forced him to stay out of it. Potentially some kind of gag order that expired since he started posting on Twitter recently and now shared his position again. And obviously people have been wondering, and some in quotes like non-believers were arguing that he dumped his shares and he already made his profit and whatnot. Well, with that post, he actually proved the opposite. So by now he's holding an astonishing 5 million shares with a value of 100, or value as of time of posting, $115 million, considering that the price went up compared to that almost 100%. So he pretty much has around $200 million in shares. Plus, on top of that, during the last couple of weeks, it was really interesting to see that almost every day, right before market close, somebody bought 5,000 June 21st $20 call options for GameStop. So in the money call options for insane premiums. And there was speculation who it could be. Well, now we know it actually is Deep Fucking Value that bought like $67 million worth of those call options. So he has a total of 120,000 call options as well. And outside of that, another 30 million in cash for more call options or shares, or just to keep it as cash. So pretty much maybe he sold and bought in again. Maybe he held the entire time, doesn't really matter. But as of this post, he apparently holds or held 5 million shares plus the 120,000 call options. And I'm not saying that's the only reason why, but it's for sure a decent trigger for the run-up that we saw. So for the gap up. Now, I haven't moved any of the extensions and retracements that we had on the chart last week. If you remember last week's Friday episode, I was talking about that this here appears to be wave 1, wave 2, and that we now have another wave 1, 2, and should be in wave 3. And I also pointed out that the professional, or not the professional, but the expected or probable targets for this third wave would be at least 31 to 34. I assume the price levels didn't change, but so the 138.2, 168.2 extension, or the 238.2, 261.8 extension. We touched the 231.8. However, we have to consider it's possible that this now would be wave 1, wave 2, wave 3, wave 4, and we get wave 5 here to complete another first wave. Then we get a wave 2, and then we get a wave 3, and so on. It's also possible that this here is only the third wave of this movement here. So that would mean that this third wave isn't finished yet, and that the profit target for this third wave would actually be around the $70 mark at least. Yeah, that's also the reason why I decided to start today's stream early and not just half an hour before the market opens, because I wanted to have the time to dig into that. Now, in case you're wondering, the software I'm using here is called Motive Wave. The broker I'm using in the background as a data source is Interactive Brokers. And the, in quotes, analysis method that I'm using is called, I'm going to switch here real quick, Elliott Wave Theory, or the Elliott Wave Principle. You can use a link in the description down below, and you can read that book online for free if you want to, or order a physical copy. But yeah, you don't necessarily have to. I personally am a huge fan of Elliott Wave Theory, always have been. Even back then in the day in 21, when the whole GameStop movement in quotes started, my posts in the community were about applying Elliott Wave Theory to the run-ups. Interestingly enough, if you're familiar with Elliott Wave Theory, it's about having like impulsive waves in basically the overall trend direction in this case, and says that overall the movements will subdivide into 5 waves. And if we look at the recent movement, it looks like we have some kind of 1, 2, 3, 4, 5 up here. Potentially, it's also possible. So, I mean, we would have to count the subwaves, but that's like a different topic. So, or to keep it really brief, whenever we have a wave pattern that could look like this, then each of those waves, so wave 1, wave 2, wave 3, wave 4, wave 5, will subdivide into another wave. So wave 1 would subdivide into another 5-wave pattern. It's going to be hard to put in here right now, but yeah, now it disappeared. Okay. Wave 2 would subdivide into a correctional wave pattern, which would be 3 waves, so ABC, or multiples of 3, so 6 waves, 9 waves. Wave 3 would again be 5 waves, wave 4 would again be 3 waves or multiples of that, and wave 5 would again be 5 waves, yeah? So as a result, if I were to, let's let the auto labeling take care of that. Yeah, so we could potentially label it like this, but it's also possible that, for example, we haven't seen that 5th wave yet, and that here is wave 3. We would have to put a lot of effort into working this out to really get down to it, to define that. I think it's not that relevant at the moment, but just to try to explain it. So, because if that would be wave 3, then we would have another 1, 2, 3, 4, 5 in there. However, if we look closely just from here, we could see 1, 2, 3, 4, 5. So potentially, maybe the auto labeling also manages that. It's not super reliable, but no, it doesn't. Okay. Potentially that's 5 waves up, which means there would be some kind of corrective wave. There we have 1, 2, potentially 3. Yeah, so overall the big question is that here wave 5, which would turn it into a wave 1, since again, each wave subdivides in other wave patterns, and by definition then also is part of an overlaying or a bigger wave pattern. However, ignoring all of that and just focusing on the movements we had after we went down to $17.70, which, by the way, is also interesting. If that here is a correctional wave that subdivides into A, B, C, then we would expect that wave A looks like this, wave B looks like this, and for wave C, we get 3 potential profit targets. They're not guaranteed, so there's no like, none of those profit targets are like set in stone and 100% guaranteed, so they will always happen and you can bet your house on it, but they are the most likely points to happen in Elliott Wave Theory. So when you have a ABC corrective pattern, the rules for that are that we would have, or we would need 5 waves in there, 3 waves up here, and another 5 waves down here. And then for the profit target, if that is wave A, wave B, then wave C will at least reach 61.8%. So, or most probable, at least reach 61.8% of wave A. Most likely the 100% mark. So very often if we have a zigzag correction, then we would have wave A and wave C in quotes identical in terms of price movement, and sometimes reach the 161.8 extension. There are also cases where it goes further, cases where we turn around briefly before 61.8 and whatnot. Yeah. So, but those are the most probable areas, and we see that basically we fell 5 cents short of the maximum area based on that probability or most probable cause. Now, anyway, that gives us a new starting point because it means that our corrective wave down here finished at this point. And then from here on out, we can see that we have a 1, 2, 3, 4, 5 for a wave 1. Then we have another ABC where, again, we could or can add an expansion here to basically get a rough estimate of where the turnaround, if we did the right analysis, will happen. And we see that basically the 100% mark would be at 20.02 and we went down to 20.10. So we got very close to the 100% mark, where the movement of wave A and wave C is almost identical. Yeah? Additionally, whenever a wave corrects, the retracements very often, but not always, again, probabilities will turn around at the 38.2 retracement, 50%, 61.8, or 78.6. In this case, we can see that pretty much the 61.8 mark is roughly where we turned around, plus minus a few cents. Yeah. Now, if that would be wave 1, the next probable thing is that based on my experience now over the last couple of years, I'm by far not a master with Elliott Wave Theory, but I'm also not a beginner anymore. But so based on my experience, if that's a wave 1 and that's a wave 2, the third wave will most likely turn around at the 2618 extension. So that would be wave 1, wave 2, and wave 3 shoots up here. Sometimes it only reaches the 1618 extension. Other times we reach one of the multiples, so 3618, 4618. And in some cases, instead of the 618, it's the 382, so 38.2 extensions. Yeah, so we have areas where we expect a third wave to go to. Now, again, there's probabilities. It's like just based on experience that a third wave very often does that. No guarantees here. However, we have to consider, when we zoom in, we see that we have our wave 1 here, we have our wave 2 here, which means from here on forward, we should have our third wave, and that third wave again has to or should subdivide into 5 different waves. Now, for that, we probably need a 15-minute chart, and it's already going to be hard to look at with the recent run-up. Yeah. So if we ignore the run-up for now, zoom out a little bit. That was some minor mistake last week. So we start from here, and we would assume that this is our wave 1, this is our wave 2. We can, for the fun of it, also then check roughly, and we see, okay, in this time, it turned around at a 50% retracement, plus minus a few cents. I actually thought, because of the movement here, I mean, if we look at it on a lower time frame, but I will not go lower than 15 minutes because the things just get too cluttered. But if we were to look at it at a lower time frame, we would notice that there is actually probably an ABC pattern in there. But on the 15-minute time frame, it looked like, okay, that's only wave A, that might be wave B, and we still get wave C. Yeah. So either way, that means that this here would be our next wave 1. And just zooming out a little bit to clarify that again. So if that's our wave 1 and our wave 2, and we're right now in the third wave, that third wave subdivides again into 5 waves. And within those 5 waves, so in that third wave, that would be potentially the first wave of those 5 waves. Yeah. Now, zooming in again, but again, have to make sure that we keep that gap out. Additionally, from here forward, we would also then potentially have 5 waves. And that's where things get tricky, because if we nest those waves or basically try to work out what's the kind of like the sub-wave of the current wave we're looking at, things get to or tend to get then challenging to spot properly. Let's say it like this. So we might not try to work out this part here. But the important part is the following. If we look from this new first wave, that is the first wave of the third wave, then we notice that we again get our profit targets. And in this case, for example, we would have profit targets at the 4618, 43. We obviously shot through the 261. So we also shot theoretically through the 4618, which means I assume, or in my opinion, that third wave may not be finished yet. But again, wave 1, wave 2, wave 3, and I think wave 3 will at least hit the $49 to $51 mark. Yeah. Again, no guarantees, just my opinion, as you know. But the reason for that is because that third wave here also has to subdivide into 5 waves, and that might be the case in the form of 1, 2, 3, 4. 4 maybe not finished yet, so we might still get a drop here and then push 5, and that 5 would then only finish this third wave. And potentially it could also be one of the higher targets. So I'm just saying, like, we didn't bounce exactly on one of the targets. We don't have to, but usually we do. That's why for my analysis, I assume that we haven't finished this bigger third wave yet. Actually, let's zoom out again. Let's try 30-minute chart. So in my opinion, what we may be looking at is that this here is wave 1, 2, and that we are currently still in wave 3 and haven't finished wave 3. And then here within that one, we have wave 1, 2, 3, 4, and 5 will then finish this one. So I can also label that. That would be 1 and 2 potentially is right down here. Wave 3 is, in my opinion, potentially this one, but also could be this spike. Which one is higher? 47.50, 46.50. Okay, that's then, yeah. That's then this one here. Now come on. And then wave 4 is either already finished here, or wave 4 is basically A, B, C. So it could be finished here, could still go a little lower. And then we get wave 5 that, as said, finishes this third wave then up here. So that's my opinion, which means right now we still have room to grow. Now, as for the fourth wave, it would very often also retrace based on the Fibonacci extensions or retracements in this case. However, when we have very strong movements in one direction, we might fall short. Yeah. So since this point here wasn't higher than that point, it stands to reason that this here turns out as A, B, and we still get wave C, although it doesn't have to get much lower in this case because wave B pretty much recovered almost 100%. In this case, yeah, no guarantees, but I would not be surprised if when we open, or by the time we now have a 30-minute chart, so if we go down a little bit now, and then when we open, we get a push down maybe to the 36 or 35 mark, so around the 38.2 retracement, and from there then start our further movement up to finish that third wave. Once that specific movement is finished, I'm going to get rid of that extension right now, and off, or we can keep that retracement for now. Once that specific movement is finished, we can use an expansion, because very often if we apply the line from wave 2 to wave 3, and once we know where wave 4 ends, so wave 4 could be over already here, but again, I think that it's not over and that we might see something like this. Yeah. And then we get a fifth wave target based on that expansion, which would be at least the 61.8. Again, it's like sometimes it doesn't happen, but that's like, in terms of my experience, what we see most often. So that would be the minimum target for that fifth wave, and that would be, in quotes, the maximum target for that fifth wave, which again, that fifth wave will only, zoom a little bit, so that would be the minimum target, and that would be the maximum target. And that fifth wave basically only completes this third wave. Now, where did I put it? Are they already linked? No, they're not. Okay, a little bit to the right. Yeah, would only complete this third wave. Then we get another fourth wave, and then we get another fifth wave that pushes it higher. So although we need to see the development, so how things turn out, how this here plays out to confirm that actually either here the fourth wave is already over, because if that were the case, we obviously get a different profit target, or if the fourth wave might go till here, or maybe it goes even further. And based on that, we get our profit target for the fifth wave. Now, it's going to be hard to label all of this, especially when we have drastic movements like this, and especially unlike other instruments, like, for example, the continuous futures for the NASDAQ, where we have 23 hours per day trading data. We have overnight gaps that make it harder to spot the patterns. But it's going to be interesting to see. Now, another thing we can try, I haven't done that in a very long time. If we, yearly chart might be too much. We don't even get, I don't know, we get history for quite a long time. So monthly might work. Yeah, we have 21. Yeah. So if we look at the monthly chart now, that wasn't that clear. I mean, especially especially like the very long downwards movement that we experienced. Not sure if that was a fluke. I don't recall in July to see GameStop trade above 160. Yeah, so I think that might be a data fluke here. But if we look at that, it now starts to look like 1, 2, 3, 4 might already be here, but that makes that whole pattern here 1, 2 in some way. So really, really weird. Or 4 might just finish here. So here we have a low of 959 and that was adjusted 960. Okay, so yeah, so theoretically it's possible that the overall pattern looks like this. Yep. In which case this fifth wave here would have a profit target between 207 and 1,357 per share, which would then finish another wave 1, then we get another drop, and then we rally up further for a third wave, yeah, and so on. Although, again, those things wouldn't happen overnight or in a minute. I mean, if it's a short squeeze, obviously it will happen fast. But the overall point is that some of those patterns obviously take time to play out, like we can see for this whole sideways movement that originally during 2021, we spent quite some time also in live streams trying to label this whole mess here. And it just turned out to be a huge pain in the ass, or for me, next to impossible, probably because of a mix of like not knowing Elliott Wave Theory well enough back then, plus in combination, while it's relatively easy to, we can even jump on a 1 minute chart, although we might have to go back a little here. Also before that, it's relatively easy to, even with the naked eye, notice specific five wave patterns. So potentially, I don't know, like 1, 2, 3, 4, 5 for wave 1 could be, yeah. Or if we look here, that movement here, 1, 2, 3, 4, 5. So it's really relatively easy, depending on the time frame you look at, to identify some of the 5 wave movements. 1, 2, 3, 4, 5. 5 could be here, and the correction could be a flat, which makes a new top. Yeah. The hard part is always, or in my opinion, the hard part is labeling the corrective patterns, because they can be messy. Like if we zoom out again, the drop we had from 80 down here, which is obviously this whole part here, is not so easy to label. Whereas the impulsive waves, so the 5 wave patterns, are always relatively easy to label. Yeah, so the hard part always is like figuring out, or the two hard parts. First of all, labeling the corrective patterns, because they are not always obvious. And the second part is basically, yeah, like labeling the individual waves and then figuring out the subwaves correctly. So because in the current assumption, we say this is 1, 2, and then that's only part of the third wave. So there should still be a push. But the other option would be that based on this extension here, that we hit the 238 already, so that this is actually 1, 2, 3 already finished, although then we would need to have 5 waves in there as well. And then we'll get wave 4 and we get wave 5. So we would be off by 1 wave count, which would then ultimately change our overall target. Yeah. Yeah. So much about that. I covered that in quite, yeah, like faster than I expected to. What's left to do basically for today? Not sure how long we'll stream today, so we'll see if the movement slows down or so. But yeah, what's left to do is basically keep an eye on the movement. What's interesting, however, there are a few things that are actually interesting. So first of all, back when GameStop originally took off, there were a few other stocks like BlackBerry that rallied up, and AMC, haven't checked that one, yeah, not in a while, but a little bit, that rallied up, COS that rallied up, and there were a few others, but those are the 3 that I recall now. And as we can see, all of those also had price jumps overnight. Surprisingly or interestingly, that they are still somehow connected. I personally don't know how they are connected, so it's also not that I care too much, but it's an interesting aspect. Yeah. Now, then there is another thing that I noticed, and that is like over the last couple of years within the GameStop community, there has been a huge, not push, but like incentive to educate people on direct registrations. So basically registering your shares with the so-called transfer agent, which in GameStop GameStop's case or in many other cases is computer share, which is great because we're gonna open up another Reddit tab real quick. So wait. Because there have been cases, although it's not the exact same to point that out or to say that, I just have to find the right comment, 1 second. There has been a case, in that case, is that the right comment? No. In that case, that one, CMKM, where basically all the shares got directly registered, but there were still millions or billions of shares in circulation, and those were then suddenly worthless because they were obviously synthetic shares or fake shares or however you want to call them. Because once you have all the available shares at the transfer agent, any other share that's running around cannot be a real share. The core difference with CM, KM, and GameStop and other companies is that back then the CEO of the company and their transfer agent actually were committing fraud on their side because they also sold and issued more shares than they were allowed to. So they were actually also outside of naked shorts and whatever, or shorting in general, they were actively also contributing to the shares that were in circulation that didn't exist. Interestingly enough, back then with that case, users or shareholders started to directly register their shares, and then many of them got told by their banks and brokers that they cannot do it, and instead the banks and brokers directly registered their own holdings so that the shareholders in the end were the backholders. There are still lawsuits open for all that thing, but so core point is like, so over some time after 21, there was a movement about direct registration, about you should move and directly register your shares, because when they are at the transfer agent, they are actually registered in your name, so you really own the shares. Additionally, if they are held as book shares and not as plan shares, so you don't have fractional shares there and so on, then they also are definitely not lent out for short sellers, which obviously is betting against your investment if your own shares are lent out to bet against the stock. So there are a lot of benefits for directly registering shares. There's obviously a few caveats to that. Like, for example, if I own shares in something in Interactive Broker, I can just click on it and I can say, okay, sell that amount of shares, and I can sell it right now. Whereas with computer share, you can also sell your shares. It's just that you can also add your limit price and whatnot. It's just things are a little slower. If you buy with computer share, it's not an instant buy order, but it takes a little bit to process and so on. I don't think you can have a limit buy order, for example, that says I want to buy if the stock hits 20. So there are, in quotes, a few downsides, or not real downsides, but just like less convenient things surrounding directly registered shares. But in my opinion, it definitely makes sense when you buy a stock that you believe in and that you want to hold for some time. I also have my GameStop shares, although those are not many, but mine are also directly registered. So for the simple reason that it's the only way to ensure that those are really my shares. And if at some point the community would manage to directly register the entire float, and with that, just like for CMKM, all other shares in brokerage accounts and so on would suddenly officially become fake shares and more or less worthless, then I know my shares are already registered as computer shares, so I don't have to worry about that. I also don't have to worry about my broker turning off my buy button or sell button or whatever, or automatically selling my shares against my wishes, because they are at the transfer agent, and the transfer agent itself is not a broker, so they just hold the shares, and I can give them the order to set a limit order to sell them at this and that price. Sadly, with the restriction that, for example, while the market is not open and GameStop's last price was at $23 or so, right now I couldn't set a limit order higher than I think $160 or so. So that's also like one of the caveats. I know that's actually, there are like a few surprising things. So why I'm talking about that whole DRS thing. So first of all, so initially when everybody started to directly register their shares, and then computer share, the transfer agent got bothered by the community, they actually increased the limit order price that you could enter. So you could back then enter, I want to set a limit order to sell one share at $1 million. Well, now at least a couple of weeks ago when I last checked, and today when I checked, there is a percentage that applies, like 600% about the latest market price, yeah, which will make it harder for people that use computer share, me included, to actually say, okay, I want to set a limit order to sell a share for $1 gazillion or whatever other amount, yeah. Because I would have to wait for the price to go high enough so that then 600% more equals my limit order price to set that order. And the second thing, that it doesn't bother me, so I don't see a downside to it, but there are obvious benefits to direct registration, as I just explained earlier on the extreme example of CMKM, yeah. But deep fucking value obviously has been around since the start of the movement, since he started the whole thing by sharing his due diligence on GameStop. And now he shares his position updates, and it shows that he still holds 5 million shares in his brokerage account. Yeah. Now, no matter what broker that is, those shares are not directly registered. So if at some point, miraculously, the rest of the shareholders would lock up the float at computer share. I'm not saying it's likely, I'm not saying that it will happen anytime soon or it will happen at all, but if it were to happen, then in the exact same moment, his shares would be officially fake shares and worthless, or he would have to sue to get any money at all. And so I'm surprised, because while he wasn't active during the last couple of weeks or years, that he hasn't directly registered his shares, yeah, and I'm wondering why. So again, like I know the benefits of direct registration, so I also shared them with you right now. I know the potential caveats, so the downsides or inconveniences that it brings with it, yeah. But I I just cannot find a reason why Deep Fucking Value hasn't moved his 5 million shares to computer share. So what could be a reason? So I really don't know what could be the reason. So it's really, really, really hard to say, unless he maybe in between sold and bought in again because he was trading the bigger swings or so. Not saying that it's likely, but that would be an option, because obviously that would be harder to pull off at computer share, but easy to do with your broker. So it's really, 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 really something that, that I'm wondering about. So I'm just wondering, like, why are his shares not directly registered? It doesn't make too much sense to me. It's not that it matters too much as well. So again, we talked now about the benefits and the downsides of direct registration, but it's something that jumped into my eye. I also asked on Reddit today, but I haven't gotten an answer from anybody. One guy suggested, because he's also trading options, but I mean, I have shares directly registered. Of course, my account is by far not worth as much as Deep Fucking Values, but no matter if I have shares directly registered, I mean, I can still trade options with the money I have. And he obviously has another 30 million in that account, so outside, and probably more, so probably was 100 million, since that might roughly add up to close to 100 that he uses to buy options. So even if he would have transferred those shares, it would have no impact. The only exception would be if he would do something that requires margin and then basically uses the GameStop shares as collateral. Yeah, but I don't see that happening either. Now, it's possible that he holds other things other than GameStop in that account, maybe, and they're just filtered out and we don't see them on the screenshot. I also don't think that's the case. Anyway, like, you make of that what you will, so you can think about that yourself and ask yourself if you want to directly register your shares or not. I'm quickly going to have to check an email, and then we're going to move on and look at a few more things. And also going to enjoy a sip of coffee. Yes, I'm still drinking my coffee. It's already warm. Not anymore. That's what I want to say. Just jealous because you like gobble it down. Huh? I'm enjoying it. So check the email, close this, close that, back we go. Yeah. Now, that I didn't want to do. That's interesting. That's about direct registration, but yeah. So that's actually an interesting thread. I'm going to share it in the chat. So that covers direct registration. I also made a video about that. So I'm gonna check if I find it in a second, so I can share it as well with you guys. So what is direct registration? Yeah, there we go. What is direct registration? So you can check that out as well. But yeah. So I mean, another option, last but not least, so for deep fucking values position would obviously be that maybe he has another position and has that directly registered, but I think that's unlikely because holding 5 million shares that are right now worth probably around $200 million at the current rate. Let's check the current rate. Current rate, $40, yeah. So around $200 million in your regular brokerage account, then it doesn't make much sense to leave that much. So yeah, like I don't know, like so. Either way, now what else do we have for GameStop right now? Probably nothing other than waiting for the market to open. As for the pattern, one thing we can still do is open up another chart, not inherit the settings, and here let's the auto labeling do its magic. So yeah, if we, for example, let the automatic labeling do its magic, it considers that spike here, which I think again is a fluke, and would therefore say 1, 2, 3, 4, 5, or 4, 5. That's wave 1, wave 2, and then we are currently in wave 3. And the profit target for wave 3, would be, I'm not sure if that's a correct representation, but it would be at least in the hundreds. However, with that fluke, not sure if let's try to reload the local data, but it probably will get the fluke again. Yeah, so still there. If we look closer and go on a daily chart and just look at what's happened recently, auto labeling is or has the opinion that this is wave 1. So the recent run up was wave 1. We now have wave 2, and we now should get a wave 3, which should get us above $100. Then would need a shortcut for resetting the view, but there is none. And if we look closer on the 4-hour chart, so zooming out a little bit. So here we have the previous run up, so wave 1, wave 2. Yeah, I have to wait for that to finish loading before I can zoom in again. So yeah, still loading. And still loading, and still loading, yeah. Well, yeah, there it's done loading, and I actually want to zoom in. So there's the same thing, wave 1, wave 2. That's the assumption of auto label, and it labels wave ABC different. So I assume that this is wave A, and we have a longer wave C. The auto labeling assumes that's ABC, yeah, and then that we have here. Interestingly enough, it labels this as ABC as well, which is actually invalid. Yeah, so there is no free wave impulse, so that AB is nonsense. And then it thinks here 1, 2, 3 not finished should go higher, so $50 mark, and then higher from there. Yeah, if we look, I don't know, let's go 15-minute chart. Let's see if we can get some kind of picture. So it assumes ABC, as said, similar to my or to my assumption that we'll still get a small push down here. So we'll have 5 waves here, ABC up here, or maybe from here ABC, and 5 waves down here, and then we take off again. And yeah, then the other stuff is like hard to see because of the distortion. Yeah, like that AB is obviously wrong because could not be in a third wave, blah, blah, blah. Yeah, so differs a little bit from my labeling, but the auto labeling is like, unfortunately not perfect. Yeah. Have to reset that again. So, okay, now what we have to do is basically wait. In the meantime, I wanted to check out a few other things that I had on my list for today. First of all, what are you? No, that I don't have to do. So NEO is what I wanted to look at. NEO has earnings, so it's obviously outside of GameStop. I already have it on the list. Never mind, remove ticker. So it's outside of GameStop, but NEO has its earnings very soon. And from the look of it, from the look of it on the monthly chart, it would tend to look like 1, 2, 3, although that could also already be 5 waves done. Then that would be 4, and then we would get wave 5 up, or that's already 5 waves, 2 waves, and up from here. Although that would leave us with the question, first of all, if that would only be wave 3, we would expect to turn around of one of the usual retracements, which we more or less do on the 78.6. On the other hand, if that's only wave 3, we would also expect that we turn around the 2618 extension, which we also more or less do. So we are off by a few dollars. I mean, over a very long time frame. So that kind of checks that this could be 1, 2, 3, 4, and then that would need to be a so-called leading diagonal because wave 4 enters the price territory of wave 1. And then the question would be if we're already finished here with the downward movement, which is a little bit harder to decide. But if we look closer, okay, weekly is not enough, daily, then it stands to reason that we have some kind of 1, 2, 3, 4, 5 A, B, C. In this case, we can see the 3-wave pattern relatively clear, down, up, down. We see that if we look at the entire wave pattern, we pretty much turn around on the 50% retracement, again, like the most common 38.2, 50, 61.8. And which would then point towards, which we can also see with the naked eye, that is the next wave 1, 2, and now wave 3. And that brings us to the question, so we don't need that anymore, we don't need that anymore. But if this would be wave 3, we would expect to potentially, I mean, at least hit the 161.8, which we did, but potentially hit the 261, which means we would expect NEO actually to rally up, which could happen if they have good earnings. Now, the big question is for NEO, but we only will see that in 60 minutes when the market open, how the prices for the options are. And I'm going to duplicate that for a second. The issue, however, is that if I assume for NEO that they will go to $6 and I want to just risk, I don't know, let's say at most $500, yeah, then there is not a really good trade hidden here. So there is in terms of using options, yeah. So I prefer options by now for like a bunch of different reasons. Like for example, last week or 2 weeks ago when NVIDIA earnings happened, I actually was relatively sure that NVIDIA will go above 1,100. Now I could have bought shares, but that would have meant like around $1,000 or $950 per share. And if it goes up, I make 10% profit on that. Or I could, which is what I did, basically get a so-called, in that case it was a bull call spread that looks like this, where basically if we zoom out a little bit and put that to expiration, it ends up to be in a situation like this, although my calls were closer to each other, so that there is a certain point where if the price is higher than that, I have a fixed profit, whereas on the other side, if I'm wrong, I have a fixed loss. Yeah? And in that case, for NVIDIA, for example, I found options where my risk was around $500, but my profit was $1,400, if I'm right. So like almost 1-to-3 ratio. Yeah. And that makes more sense than buying the shares if I just want to basically see if I'm right with the earnings result. Yeah. With NEO, it's now a similar thing. If I think they will go above $6, I could make that play here. And we see I could pay $45 premium, which is the price from yesterday. So those options might be more expensive now or cheaper once the market opens, and would have $45 risk, so I can only lose the premium, but my upside would only be $54.70. Now, if I push that second call option here, it increases my profit, but only if we reach a certain point. But on the other hand, it also increases my costs slightly. Yeah. So, and the other question is, will we reach that? The next thing is for NEO, the earnings on Friday, which I think they're even after market close, so that game already is actually obsolete. Upcoming call, 6th of June, but I think they are after market close. Yeah, and since the options would have already expired by then, that's not going to be a good move for me. So would need to play actually the 14th up. So, and then does that change? Do we get better? Probably not. Yeah. So bull put, bull call spread, both similar. So if we change that to the 14th, which is actually then interesting because for us relevant, or for me relevant, would then be the 10th, so the Monday at market open. So basically the solid line that you see now. So an option always has basically a final outcome, but on the way there you have the curve that basically slowly approaches the final outcome. Yeah. And if we look on Monday, the curve would look like this, which means if NEO would be at $6, I would only look at $38 profit if I close the trade out. Whereas if it would need to go much higher, it would actually need to go to where do we have the maximum profit, to like $10 almost to get the maximum profit out of that play early, or it would need to stay above $4.80 to be break even on the Friday after earnings, or above $7.50 for the maximum profit. Yeah, so it's like a tricky play. Yeah, let's check 4 hours. There also we can see 1, 2, 3, 4, 5. Now potentially we'll get a correction here for wave 4, and then we get a 5th wave that just completes this wave here. So we should get to $6 already with this movement. And then we get another drop, and then we get another 5th wave. That at least would be my opinion of how this will play out. And now again, at $5, I could buy the shares, but if I'm right and we move up to $6, I'm making an astonishing 20% return. So it's not really, and if I'm wrong and the earnings tank, I lose probably at least 20% or more. So therefore, that's one of the cases where I think that options might be the smarter play, but I'm having a tough time for NEO deciding what kind of option to go here with. Especially option prices change depending on how the underlying moves. So if NEO drops, then the call options for $6 will become cheaper. If it moves up, they will become more expensive because it becomes more likely that that will happen. Now, if my expectation is that this is 1, 2, 3, and now potentially 4, so 1, 2, 3, 4, 5, so that's overall 1, 2, 3, 4. If that's my expectation, then, especially since we hit that minimum target here already, then it would be smarter to wait until we go down here, or wherever wave 4 ends, that we could add a retracement to guesstimate that. So assuming that the 3rd wave is finished here, so 1, 2, 3, 4. Well, it would make more sense that the 3rd wave pushes till here, because 1, 2, 3, 4, 5, although 5 is already long enough as well, yeah, but it could be. But technically around 528, that would potentially be the time to buy. So I'm gonna set an alert at 5:30. Yeah, so I think we'll get a drop here. If we cross that, it makes the options cheaper. Now, there are obviously then 2 ways. One way would be to make a play like this, so where I combine 2 options to limit risk and profit. And on the other hand, I could also just say, I mean, right now we don't have any prices, but if we go back here and say, build long call for NEO 14, yeah, so at $7 or at $6, we can see I can also just pay $25. And then the outcome is like this, that if we go to $7, I look at $70 profit. If we go higher, I actually benefit more. That might actually be the smartest play in case of NEO, to just drop $25 on that. Either I'm right and it's going to pay off whatever amount it will. So again, it already depends on how the curve moves. So on the 10th, the curve would look like this. So actually at $7, it would already be $80 that I could expect in profit unless the volatility changes. which it might do. As you can see, higher volatility means price or reward goes up. Lower volatility means we're pretty much on the final line from day one. So yeah, tricky choice. Yeah. So that about NEO. Now I'm gonna check in on GameStop again. Still moving like not at all. But again, I think that will turn out as A, B, C, and we get a small push down here. Auto labeling also. No, that's not auto labeling. That's our labeling. Yeah. That's our. No, there's auto labeling on the chart as well. So let's get rid of the auto labeling. But auto labeling also put 0.4 here, so might be onto something. So that would likely turn out like this. And what else do we have? Grab. Grab is something I wanted to look at there. Quickly before the market opens. And we have our eye on GameStop then to see how it plays out. Monthly chart, horrible. Okay, so went public and crashed. Happens very often because, like, from a psychological point of view, companies tend to go public when they're most hyped, which in an Elliott Wave perspective would mean somebody founded the company and then they start working, and then when they are most hyped, they go public, and then you have the correction down. So it's not always happening like this, but often happening like this. So, and then basically somewhere you have that end of that correction, and from there things could then improve. But it's going to be hard to. I mean, we can see a clear 5-wave pattern here: 1, 2, 3, 4, 5. Yeah, that's a good start. But it was a lot of, like, in quotes, just sideways movement. So little. Do we have a 3-day? Okay, 3 days might work to get this visible. Yeah, harder to see here, but potentially also 5 waves. Correction, 5 waves. So looks like we're moving up here. So like this might be 1, 2, 1, 2, 1, 2. So we would be in the third wave of a third wave of a third wave. The question is, are there options for grab? Yes, there are. How much would we have to pay for? We don't see the prices for another 5 minutes. Let's check on option strat. There we will get to see prices duplicate. Grab. If we say January, $5 call options. Really? Yeah, I think we'll grab one of those. I mean, that's like, if I can get that for $50. So for $55, and it's 2 years time. So if Grab doesn't go broke and they actually make it up, it just has to go to $7 to offer a 300% return. And if they actually are succeeding, like one of the posts on Reddit suggested, then that could potentially pay out big. I mean, in like, what's that till then? 1.5 years. So, I mean, big in quotes, but like as a percentage, I'm always looking at trades as a percentage. So dropping like $50 on that. Question is now for Grab, last 4 minutes before the chart opens. If we look at this, this might be 1, 2, 3 in some kind. So can I maybe get it cheaper? Yeah, so what does the auto labeling suggest? Probably some nonsense. Yeah, it says different movement. Okay, no, I disagree. So, but if that would be basically 1, 2, let's see if we can find something that, I mean, yeah, 61.8, and then that would potentially be the next. 1, 2, either from here or from here, it's hard to say. 78.6 point landing, so would need to be A, B, C in that case. And then that would be the next 1, 2. Also 78.6, so another in quotes point landing now, and then that would be, yeah. And I probably will just buy it. So if it's around $50, I'll probably just buy it once the market opens. If we drop a little and I could have gotten it $5 cheaper, so be it. But from the looks of it, I think this might actually go a long way in the next couple of years. I could be wrong because we don't have a long-term pattern. We just have that huge drop since the IPO. And the first signs that this might be the start of an impulse wave up, where this could be wave 1, 2, wave 1, 2, wave 1, 2, and which means third wave of a third wave, so third wave of a third wave of a third wave, which should tend to stronger movement. Not sure if there are earnings incoming for Grab or so. We can Google that as well, since we're still waiting for the market to open. Grab earnings. March missed their earnings potential. Okay, yeah, unexpected. So reported break even. Okay, still at a small loss. Expected 0. So they were positive in one quarter and then slightly negative in the other. But revenue has been surprise. Earnings beat by more. So it looks like they're doing well. So on the first glance, so definitely okay to get one Grab option. And what else is on my list? Yeah, the 0 DTE options for the Nasdaq. So we're going to check that in a second. So actually, before we do that, let's actually check what option flow says is the smart play here. So our option strat, if we put an extension, so if I assume this here is wave 1, 2, we would get a price target for wave 3 of $10.88. So now instead of just blindly buying a call option, if I say Grab goes to $10, what's the lower target? $10. It actually would mean wave 3 goes here, wave 4, and then wave 5. So here. So $9.40. So if we say $9, it probably already is very bullish. Yeah. So what's the max thing here? Okay, so those are all fixed plays. Although that one is, that call ratio back spread is also interesting, because it means that on the downside, if we fall below $3, we also have like break even. However, we sacrifice a little bit of the upside potential in that case. Yeah, so if we open that in the option builder and we zoom out price wise, you can see it looks like this. So at $10, oh, and we get paid for doing that. That's even better. So although the risk is higher. So if we stay at $5, we have a bigger loss. Yeah, so we would have to adjust that. If we move that up, we also get into the zone where we have a loss up there, unless we move that higher, and that moves our, no. Okay, so not interesting. But yeah, we get a pattern that looks different, where basically we also have a downside insurance if we assume alternatively we'll go down there. Although it might still make sense, because if we trade for 1.5 years and it's now at $3.60, we basically say if it loses 20% in 1.5 years, we get out break even. And on the other side, if it goes up, we benefit as well. So, but our risk is higher if we stay around the $5 mark in that case. Whereas with the regular call option, we just don't have that risk. Yeah. So market's open now. So GameStop's going to do GameStop things. Yeah. So again, I think that we will see some movement down here. I'm gonna move the other thing to the other screen real quick, so I can finish my analysis over there for Grab without interfering with what's going on with GameStop. So, and switch here to a 15-minute chart, so we see a little bit more. And yeah, so if I say I assume they go to 9, the long call is the best play. Yeah, so sorry, we're gonna go Grab. Oh, we already have it here, yeah. So, and we're gonna just get a. Oh, now the prices are up here. Okay, so new prices are higher. So what's the long call according to this latest price? Oh, it's a $7.50. Okay, so if I take that one, I get that for $15. Buy $15. Long call. Performance profile. Yeah, we don't see that here because we only have 100% move visible. Okay, so but if we look at something an earlier date. Okay, I'm gonna, sorry, back to GameStop here for now. So there we come, there comes the expected down move. So if I get the $7.50. Okay, now we get the get the $5 ones, yeah. So for $50, buy the $5 call, or try for $45. So one call, grab. Let's see if the price triggers. How's grab moving now? Grab up a little bit. Okay, so price gonna move up. Then let's buy for 50. We still get it. No, do I want to? One, two, three. So strong movement. Or not? I'm not willing to pay more than 50 right now. So 50 would be the price. I take it. If it triggers, it triggers. Now there GWEF. We have GWEF old. We need GWEF new. Trading is halted at GameStop for volatility, which is interesting because we just have been moving up and down, and we already for sure had a halt at some point. So yeah, so I guess we go down to the 35 mark as mentioned before. Yeah, then for here, can we refresh the price? And it automatically should refresh the price. So it says if I take the, how does it say that I can get the, is it updating here? Maybe it isn't updating. So 370. So the $5 call, it shows for 47. And how did I not? Did we get the $5 call now? Yeah, we got it. And we got it for 50. I'm fairly certain. Yeah. So where do we have it? Here, $5 call. So I just need to add that at Feeder Gang. So manage trade, open trade. That was grab. Type. Long call, expiration, yeah, that's gonna, we have January 2026, yeah, it's a little bit of time. And it's the 16th of January, okay. Long call strike price is 5, quantity 1, and we paid 0.50 for it then, so. Okay, now, on the other hand, yeah, that's my other thing. So that we'll have to check the options that I have in GameStop, of course, the ones that are ongoing. So on one hand, I have that one's already expired, and not June. I know June 7 is this week. Yeah, so June 7, the $20 put. Yeah, we don't get any rates because trading is halted. Are you shitting me? GWEF is also halted. Okay, then I want to check there. GWEF real quick. So, oh, they dropped 10%. Of course they did. Yeah. I mean, there I have a very, very small position, so it's not a big deal. GME is halted, as said. So, you still see the option premiums are not like really, really weird. I'm gonna have to check my profile there real quick. Open, expiry. Okay, so that's all fine. I can close that. Welches Tool ist das nochmal? Direkt verbunden mit eBKR. Hallo Olga. Die Software heißt Motive Wave. Ja. Also das ist die Trading-Software, die ich nutze, und da kannst du dann halt verschiedene Datenquellen einrichten. In meinem Fall eben Interactive Brokers, aber du kannst auch eben Google nutzen als Datenquelle, dann halt mit Verzögerung und diverse andere. Kostet allerdings, also je nachdem, Link ist in der Videobeschreibung unten, bringt dich direkt auf die Seite von Motive Wave. Da gibt es halt dann verschiedene Pakete. Ich habe da letztes Jahr, da treffen wir jetzt unsere Welle 4 Ziel, unser erstes zumindest. Ja, mal gucken, wie viel wir weitergehen, klarerweise. Ich habe da letztes Jahr zum Black Friday für, ich glaube, 1400 Euro die Selbst-Host-Lizenz unter Anführungszeichen gekauft. Das heißt eben, da ist auch ein Jahr Updates mit dabei und kann danach halt im Vergleich günstiger einfach das Update-Package verlängern. Ja. Ist auch meine mit Abstand Lieblingssoftware, muss ich sagen. Und ja, also ich habe früher nicht mit Interactive Broker getradet, sondern mit auf eToro, und habe aber trotzdem bei Interactive Broker für die Datenfeeds jeden Monat irgendwie 20, 30 Euro bezahlt, damit ich halt in meiner Software oder in Motive Wave halt die Analyse machen kann. Ja. But anyway, let's switch back to English so we address a bigger audience, and no problem. Also perfectly fine if you ask something in German in between. I'll have to deal with my options because I still have the $20 put option. For those of you that don't know how put options work, I'll explain them in a second. But that option is, I got $109 for it, and I could buy it back for 42. No, that's not right. So we would buy it back. There we already have the orders. We would buy it back basically for $1. So for those of you that are not familiar with how options work, like when you sell a put option, or let's cover the very, very basics. You have call options that if you buy them, give you the right to buy shares at a agreed upon price up to the expiration date. So like, for example, I have here for June 21st, $100 call option. So they give me the right to buy 100 shares of GameStop at $100 per share up until June 21st, which obviously only makes sense if GameStop would go above 100. Now the curve, however, for that looks like this, that as of today, if today we are at $40, for example, I could close those and actually get $379 or $380 for those options. Yeah, so I could sell them to someone else. Yeah, or I could wait. I think we'll go higher, so I'll obviously wait. And on the other hand, you have put options that if you buy them, allow you to sell a stock for a certain price, which means it's basically shorting it. So like when the stock drops, so if we would sell what do we have here, $31 put option until June 7th, if the stock drops, we can see if it would drop to $20, we could basically lock in a profit. Yeah? Now that's how it works with buying now. However, if you sell a put option, then you're basically saying you're taking money from a short seller, so somebody betting against GameStop. So like I, for example, sold the June 21st $20 put options, and I received for those options per piece $350, which means if GameStop falls below $20, I have to buy 100 shares for $20 per piece, so $2,000 total, but I still get to keep the $350. However, if on the other hand, GameStop stays above $20 by June 21st, I just pocket the $350 as profit and nothing else happens. Yeah. Now, since all options, however, follow a curve that we can better see here on option strat, so over time towards the expiration date, the curve moves and adjusts. Yeah, it makes sense if there is still, in quotes, a lot of time until the expiration. So like those are my 21st $100 call options. We see if I wait till the end, the curve looks like this. We have to be above $100 or actually above $103 or so for me to be in profit. Whereas if we check for today, the curve looks like this, that even right now, okay, that price is not fully reflective of what I paid for those options, yeah, but even right now, I could close the option for a profit because it's right now more likely that the option will actually play out fully, yeah. So therefore, it would make sense if I could right now get, for example, $1,400 for that option. It would make sense to take, or it might make sense to take that $1,400 because I then don't have to wait and keep the risk in quotes of the price going down, and in the end I just get nothing and I lose the money that I paid for that option. Yeah, so that's why, like for example, I have the June 7th, so for this Friday the put option, but we see that they are still around $36, $37. I got $110 for them, so if I want to secure that profit, I would need to basically buy those options back, and if I buy them back for $38 per piece, I would basically only lock in a portion of the profit. But considering of what I expect or how I expect GameStop to move, it makes, in my opinion, more sense to have the buy order to buy them back for just $1. So if the price goes further up, it becomes less likely that GameStop will end up below 20 by this Friday, which means I can then secure more of the profit. And I'm willing to spend $1 or $5 to buy them back and secure the profit. other than waiting till Friday for it actually to expire and getting the entire amount. Because if I can buy them back today, or if I were able to buy them back today, or we go a little bit further down here, yeah, or we're still halted. No, we're not halted right now. So if I were able to buy them back today, then I could obviously sell other options because it would free up my capital commitment. And the same goes on one hand for the $20 put options with the expiration in June. So I got $351 for them. And if I would buy them back right now, then I would have to pay $170. So I could secure half the profit right now, or I can be patient and buy them back for maybe a better price. As long as GameStop doesn't fall below 20, it's going to be playing in my favor. Yeah. Question is if I'm right here that this is indeed ABC. So like I said, then this would potentially be wave 4. And we now should get then wave 5, which should take us, if that's the end, where we turn around at the 50% retracement, minimum target would be 52.47 and actual target would be around the $70 mark. And if we see that happening, question is if it will happen during the next couple of hours, then obviously I have a very, very high chance to sell my option or buy back the options that I sold and sell my call options with a decent profit. Now, I would still believe that we go, if that plays out like this, that we then get a corrective wave and another push up, which would then be a bigger third wave, yeah. But holding the $100 call options, just, yeah. If I wouldn't have any shares, I would hold them and just take the risk, because anyway, that's also one interesting scenario with options, by the way, that the options that I played here, I actually got paid for them. So I sold the $20 put option and got $351 per option, and I sold 2 of them, so I got $700 premium. And at the same time, I bought the $100 call option and paid $120 for them. So net, I made $460. If GameStop falls below $20 by June 21st, I would have to buy 200 shares for $4,000, but I still keep those $460. So my average wouldn't be 4,000 or like 20 per share, but my average would be 3,570. So $16, $17 per share, or $17.20 or something like that per share. And however, with that combination, I create a situation where if GameStop really explodes till June 21st, then I have another 200 shares through those two €100 call or dollar call options that participate in the rally up. If GameStop drops, then I get more shares at $20 per share. But at the end of the day, it's, in my opinion, that setup is, in my opinion, better than just buying the call option, because if I buy a June 21st call option, for example, I mean, now they are more expensive, yeah, because the price went up. I would have to pay $240. And if GameStop doesn't rally up, then I just lost $240. Whereas by playing the combination of selling one put option, one has to consider where, like, for example, selling the 25 put option, that right now pays $350 or between $350 or almost $400 right now, actually. Yeah. And on the other hand, getting the, I don't know, like, again, like maybe $100 call option, you create the situation where you have actually, you get paid $167. If GameStop falls below 25, you have to buy 100 shares for $2,500. However, if it really explodes, you still also benefit from the call side. So the profile for that then looks like this. Obviously, since that expects that by the end of June or by June 21st, we go above 100, we cannot really visualize it here. But we could visualize it on here. Question is, there we have NEO. NEO, we already, no, Grab we bought. NEO, we haven't made a decision yet. Yeah. Why did we not make a decision on NEO? NEO was like, I could get a call option, but I would need to get one for the 17th. So just finishing it up real quick. So, and the question is, how is the curve on the 10th? So not really worth the risk paying $27 to get, if we just reach $6 to get $10 paid. Doesn't seem worth it. No, we're gonna, unless if I play it longer, then it probably is expensive. Yeah. So if I play it super long, then I could go for, I don't know, $10 call option. And then June 10th. Yeah, not worth it. So we're gonna leave Neo anyway. And then we can here select GameStop again, and now build. What do we need to build here? We would basically. How does that look? The curve that we need is. Yeah, remembering the names of all those option strategies is like probably the hardest part. So. Not a butterfly, not an iron condor, not this, not that, not that, not that, not neutral, no calendar spreads. How is that stupid thing called? Yeah, not a synthetic future. Yeah. Okay, let's do it like this. So GameStop 21st, price target 75. And then we would get bull call spread. Maybe that's it. Yeah, so I'm not sure. I know there we buy a call and sell a call. Yeah, that's not what we want. So, and I cannot. Oh no, I can actually. Oh, that makes it nicer. So can I remove that one? Okay, and I can say, okay, we sell the 25 put, and then remove that, and we would buy the 100 call, for example. Yeah. So I did not know that the right click works if I not put call. By the 100 call. Yeah, so the curve would basically look like this. In the end, it would look like that. So that we get paid a net credit of $152, and if GameStop is below 20, we obviously have to buy 100 shares at $2,500 total. Whereas if we are between at the end, so on 21st of June, if we're between 23.67, which is our break-even price on the last day, and 100, we just pocket the premium, so we just made $100. If the price on the last day is above 100, we have an explosion. We shoot to, I don't know, the furthest we can show here would be $190. We actually make a profit with the $100 call option of a couple thousand potentially if there is a real squeeze. So we have kind of like the best of both worlds. So even if we end up below 100, we still made this little money. The, in quotes, worst case scenario would be if it in that case drops below 25 and we would have to buy 100 shares. But we still pocketed the $100 or $125 or whatever. So it depends on when we would pull the trigger on this. And therefore, still our average would be lower. Yeah. Now, and on the way to there, so if this week, for example, on Wednesday, the price is at $50, we can see that we already could lock in a $700 profit because we could sell the $100 call options for that profit if we think, okay, we want to lock in our profit there. Yeah. So that's why that's one of the scenarios where I really, really like options. If we think about it in other terms, like, okay, we got a little lower here. So I could, for example, set a limit buy order at $25. I'm not going to do it, but I could set a limit buy order and say, I want to buy 100 shares at $25. And if the price moves down and touches that order, it would trigger and I would get my 100 shares. If it doesn't go down, I get nothing and I've wasted my time. Whereas on the other hand, I can take June 7th, 25, I'm going to remove the strategy we had here. So 25 put option and sell it. And I would receive right now $167 for that option. If then on Friday we are below 25, I would get 100 shares for $2,500. But if the price doesn't go down that low anymore, I just pocket the $167 premium. Yeah. So, and which is then money I can use to do whatever I want. Maybe I could use it to buy another, I don't know, 1, 2, 3, 5 shares, depending on the price, just with that premium. So, and that's basically the premium you get when you sell a put option is basically money you get from people betting against GameStop. So like it doesn't get nicer than that, yeah, in my opinion. So still question is, so how is the $20 put option doing? It's still trading higher than we would want to close it. I don't think we will go to below 20 by Friday. And if I'm okay to buy those shares, so I rather take the whole profit here instead of waiting. Then same goes for those. Yeah, they obviously will take longer to reach the maximum. Okay, so we'll do that. And yeah, circling back here. Now, if we look closer here, we may be able, I mean, we probably are not, but potentially this might be here 1, 2, 1, 2, 3, 4, 5. So that might be our wave 3, 4. So there might be still another push down to come here, which might then take us maybe exactly on the 61.8 retracement, or maybe a little lower. But yeah, like as we go a little lower here, we have to adjust the expansion that we have here on the chart to better, or to get our, in quotes, profit targets for a potential move up. Yeah. And yeah, so that's what we're waiting for now. If there are any questions, feel free to ask, because I think I shared pretty much everything worth sharing so far, and it now becomes a chart watching exercise. Bless you, sweetie. Yeah. Don't forget to hydrate if you're also chart watching half the day. What's so funny? Yeah. I'm not drinking enough. Should have married an alcoholic. Huh? No? Okay. Then no. Yeah, so what else do we have? So we have our grab $5 call that we got for 50, so that one is set. Berkshire. Yeah. Of course, God, that's the only downside. So what's the ticker? BR something, Berkshire. BRK. Yeah. Not dot, come on. BRK dot A. No, also not. I don't see the A. A doesn't find anything. Dot A doesn't find anything. Oh, that's great. Yeah. So how does interactive? It says BRKA, so that should be the right one. Yeah. So why do I not find it in Motive Wave? Okay, that might be wrong. It misclicked. Also no. Okay. Yeah, but Smart should still find it. So like, it still should. But yeah, maybe you're right. Let's try. No, still no result for BRKA, and without the dot, also no result. And we're still connected, so it's not a connection issue. And without anything, also not. That's kind of weird, yeah. So Berkshire, so should be this one. So did I selected in, yeah, so no, there we go. So no, so point A finds nothing. Yeah, that's the wrong exchange. So in Mexico, Dash doesn't find anything. Again, Mexico. Dot doesn't find anything. So I know I already had it once in my watch list, but why is it not? I mean, with a space, that might do the trick. Yes, there you go. So Smart is what we need. Yeah, that was a tough one. Yeah, does that look correct? I think some people would commit suicide if that's the right data. Yeah. Like I don't get other data here. Right? I'm gonna check the source. Are you shitting me? Like, that's the official? What happened here? I'm curious. That's Berkshire Hathaway, you know, from Warren Buffett. Yeah, there it's at what's that? 630,000 per share, and there it's at $185 per share. It doesn't matter. It's like pretty much. What did I miss? No, like maybe he shorted GameStop. I don't know, but it's like it literally went from 600,000 in today down to 100. That has to be. I don't know, like, I mean, but it's not halted now, is it? So let's check here. Like, where did you find that? So BRK. Come on, Berkshire. Yeah, Berkshire. Trading is halted. Like, are you shitting me? Like, I mean. Yeah, I mean, I'm not gonna short.
No, but we missed what happened.
Yeah, like, I mean, I don't know. I mean, it could be some fluke, yeah. Yeah, but I mean,
Can you double check?
I saw, I mean, in the beginning of the stream, I checked, you know, the usual things like BlackBerry costs and so on that also went up when GameStop went up last time. And they all also went up, yeah. Obviously not as much as GameStop. Okay, now we touched the 30 line. That might finish the 5 waves down here. Let's see. SMR. Nuclear power. Yeah, that's just. Yeah, but you have to imagine how many funds hold. I mean, SMR, I'd say irrelevant, but for Berkshire, how many funds and investors hold Berkshire? Yeah. So, how big of a position would you have to throw on the market to drive the price down like that? The only option would be if somebody, that it happened with Litecoin years ago when it was trading at, I don't know, $150 or so, and some guy had a pending limit buy order at like, I don't know, $9, and some other big guy was selling and his limit buy filled, and then instantly the price shot back up again, so he made millions with one lucky limit order, yeah, or hundreds of thousands or so. So the only thing would be if I get liquidated and all my shares are forced sell, and then there are not enough buyers, and so some smart guy has a $185 limit buy for Berkshire, and that triggers and that causes this candle. Yeah? And that's also the last candle. That's also then the last candle that would be recognized, and then obviously you have the trading hold. The fuck, yeah, like I'm gonna check Reddit for a second, so I'm sure there has to be something. Did he actually post it? I'm not sure if that's photoshopped or, but I mean, Jim Cramer is an idiot, so blah blah blah. Is there really? I mean, there has to be like something, or yeah, like second best source for all of that. Twitter refusing to calling it X. Berkshire halted, yeah. Yeah, market glitch, but I don't think like, I mean, glitch, the only explanation would be like you say, somebody got liquidated to basically potentially because of their GameStop short positions, of course, and then they had a certain number of shares, but how much money do you have to even have more than one share? Yeah. And they would have needed a lot of more than one share. And those shares then get sold, but there are not enough buyers. And then so whatever small limit order some dude in some basement has set triggers, and that then fulfills that candle, yeah. But that would also require a broker. that would also require a broker. Yeah, same thing. I can already see it. Yeah, so it happened to a couple of tickers. Yeah, so, but as I said, that would also require a broker that allows you to set such a low limit order and send it to the market. Yeah, but again, like, so I'm sure there is always a certain number of buy orders for Berkshire. Yeah. So might not be for full shares. I get that because not everybody has like 500,000 pocket change to buy full shares. But I'm sure there's always a certain number of buy orders. So even if you would have, I don't know, 20 million in Berkshire, so that would be like 20 shares, and you get liquidated, then you're selling 20 shares, but there should be, I mean, you see the volume is 27,000. I mean, it's possible, yeah, like, but it happened direct, but it wasn't even at market open now. Market open would be at 3:30, so that would mean like, okay, you have like 20 minutes to get your trades in order, or we close, or we liquidate you. So yeah, I don't see anything on Reddit, so it's really, yeah, really weird. And most people are still sharing the or like what most people like, the official thing is like it's a glitch. Yeah, it's not a glitch. It's something obviously happened. Yeah, somebody broke the market. Yeah. Can I get in there now? Like, I mean, obviously it's halted. Yeah, but can I just, no options, no nothing. Yeah, that's something like, honestly, like they're having the ability to just make a $200 limit buy order for $500,000 profit instantly. Yeah, like somebody, I mean, instantly it's, I'm sure they're gonna blame deep fucking value for all of that. Yeah, great. Okay, Dave Portnoy. Yeah, blah blah blah. Yeah, blah blah blah. Yeah, nice. Technical issues. Yeah. I don't know. Like, I mean, technically, you know, if there would be a way to look in the disclosures of certain funds and whatnot, and you take all the stocks that have that glitch, and you then look for who reported holding exactly that combination, then you could probably figure out who got liquidated. Yeah, but it still feels weird, especially if they got liquidated. So we have that here. That already happened in the pre-market, so the run-up. And we see that for Berkshire, the candle was at what, at 350. Yeah, so 350 was that candle that goes down. So 350 would be around here. Yeah. So if that money would have been used to buy back shares, then we would actually see a rally from here or not. Like, I mean, I'm just spitballing here, like, but then basically at 350, the Berkshire shares that you have get liquidated. So to cover your GameStop short position, because you are like working at Citron Research at the one-man company or at Citadel or wherever, yeah. And so then shares are bought back because you have to get out of your position. Or you now have enough cash in your account to actually keep your short position open. Yeah. So I wonder if again some brokers turned off the buy button because, like, yeah, like seems to. I'm gonna drag that a little bit away, and we're gonna look a little bit closer for a second. So, okay, maybe 5 minutes. I mean, that's obviously supposedly wave A going down, A, B, C for wave B, and then there, or A, B, C, yeah, like till here or so in some way. So A, B, C, And then that would be 1, 2, and then, I mean, let's do this the reverse, but it gets harder when we have strong movements, yeah, so where would that suggest a wave 3 target? 26, yeah, but on the other hand, we turned around almost at the 61.8 retracement, but we shot through the 1618, yeah, so then that would need to be 1, 2, 3, 4, 5. So we go here, we bounce here, and we, yeah, like go lower. I don't think we will close that gap, to be honest. Yeah, it doesn't make any sense to close that gap. Yeah, like that's probably one of those moments where some fuckery behind the scenes, yeah, like makes any kind of technical analysis not completely invalid, but harder. It's, yeah, like crazy. Yeah. How do I not get a notification from Interactive Broker when when something like that happens? When literally Warren Buffett's company suddenly is worth next to nothing compared to, I mean, it's just holding stocks, so it's obviously worth more. So because the company still holds the shares that it's invested in. So, and those, now that's an interesting question. Like, I think he doesn't care. Berkshire Holdings. So what are they holding right now? What holdings are as reported on May, except for, okay. So where are the holdings now? There, okay. So what's their biggest stake? EVA, or so stake in the, no, actually biggest per value. Apple, yeah. But Apple is moving normally or not? I didn't check, so. Yeah, Apple is doing nothing, yeah, so. Yeah, it's a pity that it got closed already, because, like, honestly, getting in at that price, it would literally be free money. But yeah, I have to agree, somebody likely got liquidated, but then that still doesn't explain. I mean, if they got liquidated at 350, unless now they have enough cash, yeah, but then their short position would still just stay open. So people wouldn't just start selling now out of nowhere just to stop the movement. On the other hand, let's add this here. So if that would be A, B, C, then we're already below the 161.8. Wrong. Didn't want to change that one. I wanted to change that one. No. Yeah, so that's why I mentioned earlier. So like those extension levels are in quotes guidelines that very often hit the mark on the spot. But in this case, for example, we retraced already further than that. Although I think I said that A, B, C, that would be wave, potentially wave 1, 2, 3, 1, 2, 3, 4, 5, and then somewhere we'll then start the upwards movement again. Yeah, it's always a little disappointing because I really didn't think that we will drop like this. But on the other hand, yeah, if the counterparty, so the people short, are the ones that are also market makers, then they obviously will do whatever they can to try to survive another day. It's insane. Like, it's funny that they just switched to settlement of, so like T+1 instead of T+2, or theoretical settlement within a day instead of with 2, and that just during the weekend the new CAT system got into effect, which is like additional reporting requirements and something like that. Didn't look too detailed into the CAT system, so but yeah. And when the CAT system had its test run or so, the only ticker that I saw that had some issues reported, or what I saw shared on Reddit, on Twitter, was GameStop. And now how are those the 4 market movers today? Are you shitting me? Like 3% market mover, yeah? Like, I mean, how do you post market movers today and not include GameStop? Like, which stock here? Minus 6%, great market mover. Like, I mean, what the fuck, bar chart, yeah? So 8%, yeah? Like, it's like the, yeah. Yeah, what appears to be a market glitch, yeah. Did GameStop just break the market? Yeah, that's the thing, yeah. Yeah, for those of you that haven't voted on their shares yet, yeah, now is the time to vote. Which, by the way, talking about earlier about direct registration is actually another argument for direct registration, because when there are more shares in circulation, and there always are if there are shorts possible, because when you own a share and I sell it short, I borrow it from you and I actually get your right to vote and I sell it to somebody else, yeah. So they are technically then suddenly, out of your share, there are suddenly 2 shares, which means with short selling, there are always more shares in circulation than actually exist. And so therefore, when you then vote with your regular broker, your vote might just not be submitted, because they just count how many votes they should submit, and whatever additional votes there are, they just get thrown away. And there's no specific rule. Like, for example, if there are 50 shares to vote, but they have 100 votes total, they are not saying, okay, we throw away yes and no votes in the same percentage, so that the effect on the vote is still the same, but they randomly can throw them away. So they can throw away those votes or not report them that are against their wishes, in quotes. Yeah, in that case, the wishes of the market makers and brokers and whatnot. And so when you directly register your shares, you know that your vote actually counts. So that's probably one of the other big benefits of direct registration. So if you want to be invested in a company long term, and you want to make sure your votes counted, then direct registration is the way to go. Yeah. Other than that, yeah, it's just waiting time. But I'm still baffled about the whole Berkshire thing. How much money do you have to owe or like be short to get your positions liquidated in a stock that trades in the 6-digit area, and then especially get that many shares of that stock liquidated that there are not enough buyers anymore, so that some lucky bastard with his limit buy order, most likely at $185, that just did it as a joke, so maybe if it drops that far, I'll get a share or whatever. Yeah, I know, like, but how much money do you have to owe? Like, yeah, like, I just cannot comprehend that right now. Like, really, like, I mean, it's the only reasonable explanation. Yeah, it's the only reasonable explanation is somebody got liquidated, their assets got sold off, and their assets happen to be Berkshire Gold and the other things that you mentioned. Yeah, and yeah, everything got sold off. There were not enough buyers. Therefore, every ridiculous low limit order also triggers. And but then you still, like, either you got enough money and you now fulfill your margin requirements again, so your short position is still open. Neo crossed 530, Crocs costed, oh, Crocs, we're gonna check that out, move that aside. So crossed 155. Yeah. Okay, so from here we should get, no, what, like 2 hours. That would potentially be the end of 1, 2, 3, 4, 5. So we would get a drop from here. And that would potentially 1, 2, 3, 4, 5. And that would then, oh, that would be potentially the end of this 5th wave. Yeah, why would I buy then? What's my description here? Consider buying, like seriously? Ah, put option. Ah, okay, that makes sense. Yeah, Crocs. So what would be my target? Yeah, like 1, 2, 1, 2, 3, 4. Tricky. Yeah. So there is the option that this is only wave 3, but then still there would be wave 4. So I just have to consider a smaller or higher target then. Now come on. Now, the actual consequence of that is actually even worse because, like, everyone, well, not everyone, but they're like, if you held Berkshire shares in your account, or I'm actually curious now, let's jump. So, like, for example, if you were on eToro, yeah, Berkshire, but A is not here, and B is only down 4%, okay. BRK.A, not here. Okay, they don't trade that. Okay, good for the people on eToro. Because if you had a long position on margin, then your position might have also gotten liquidated because you obviously suddenly don't fulfill the margin requirements anymore. So if you traded Berkshire long with leverage, then that movement down would have triggered your stop loss and might not even have hit it, but it might have just triggered below that. Oh, yeah. So this way. So the assumption would be for Crocs that we go down to 124. Okay, and we do that that's from April, May, June, so 3 months. So let's say by the end of the year, Crocs. So I said what? 125. 125 by the end of the year. So let's say and there is nothing that says that nicely. How much are the put options for Crocs? Yeah, I'm not gonna risk that much on that stock, so never mind. Still interesting to see if I'm right, so I'm just gonna add an alert here. That's my assumption. Just setting the alert. If it triggers, I know I was right and missed an opportunity. And then we can actually remove the ticker from my watch list at least. And then for Neo, I had the 530, and the 530 cross was for, I didn't leave a comment there, which is stupid, but yeah. Bloom, yeah, automation, yeah. Yeah. The worst performer. Crazy. That we don't need. Is that now loaded? So Neo assumption was that will drop from here because that would be 1, 2, 3, 4. Now zoom in a little bit. Okay, then there is more room to come down or not. Like, so there we have the high. 1, 2, 3, 4. Is that already 5? Should be. So we hit the minimum profit target here. So at 61.8 for that fifth wave. And now if that wave now is finished, we would expect that from here we retrace as said at least here, but that would only be wave A potentially. So we get wave B and wave C. And now if we zoom out, one, two, and that would it already be wave 3? Probably not, but that would be wave 1, 2, and then we get 3, 4, 5. So actually the target for Neo long term personally would be longer. But there's no point to get the options already because I think we might go lower. And if we go lower, then we probably go to 5.9 or so. So we're gonna set another alert at 5:15. Consider Neo Deep's call. There we go. So clear history. This will move alert. No, I don't wanna. Let's keep the history. Okay, so we have Neo there. So yeah, back to GameStop we go. Gonna be interesting to see if that was actually now the bottom of that wave pattern here. It doesn't have to be, but wouldn't mind. In which case we would expect wave 5 to at least reach $45 or most probable, or at most $60, and then we would get another corrective wave. We'll see how that plays out. And in the meantime, I'm gonna keep an eye on Twitter, but I'm gonna do it on the other screen. Stock market is broken. Yeah. Bank of Montreal as well. Yeah. So I think really the way would be to figure out every stock that had that 98, 99% drop, and then go through the disclosures to figure out which fund or market maker or whoever or whatever party that has to disclose their holdings regularly was invested in all of them. So, and then you have who potentially got liquidated, and you would potentially also know for how much. So if they have to report their holdings, and then you know that they likely were short GameStop because that's the stock that rallied up like crazy, and that they likely didn't report that properly. Surprise, surprise. So. There we go. Okay, now with that, and I already updated that, and okay, yeah, so yeah, patience is a virtue. It's tricky because if that is the bottom, we would expect a 1, 2, 3, 4, 5 that takes us here, or up to, what did we say, 60 or so. And then obviously part of it would be stronger movement. Hi Akashi, great to have you here. How are you doing? Yes, on occasion. So I tried to fit it in. I mean, today's stream is a little longer because of the weekend or like pre-market rally that GameStop showed. Usually right now I'm trying to stream around like half an hour or 15 minutes before the market opens into the market open to basically share the progress on my positions and potential adjustments and whatnot. And yeah. Digital logic design exam. Yeah, good luck with the exam. Yeah. And yeah, other than that, still having the Twitch streams, but they're for gaming, as you know. Every Tuesday morning, but also some spontaneous streams, probably one in the evening as well, to continue in Hellblade Part 1. So started that one as well and need to get the achievements that are missing there. And that's, I think, it with live streams. Actually, I planned to record a new Pi Network video today, but because GameStop moved like this, I changed my plan. Might still get to record it, not sure, depending on the time, because it's already 4:30 here. But for you, it's already later anyway. So yeah. Now I'm a little bit torn because if that corrective pattern is already done, then we would now see the next 5-wave impulse develop on the upside, which might then contain also some strong movement that we still get to see today. So therefore, it would be nice to keep chart watching, or chart gazing and follow the movements. And on the other hand, I can also do other things with my time. So yeah, like tough choice. Yeah. Either way, I'm also gonna take a very, very short break. So sorry for the noise. Yeah. I'm gonna mute the microphone, but leave the stream running. So be back in 5 minutes or so.
Bulletin received.
Okay, so we'll go back. Let me finish exams. We'll be on every live. Yeah, like hopefully you are. I mean, you're probably already gone, but I wish you a pleasant rest of the day and good luck with your exam tomorrow. Yeah, so we are still candle watching. I will, however, do some other things on the side in the meantime already, simply because, not because I can, but because a few things need to get done. So, yeah, you can write in the chat in the meantime. I'll hopefully look from time to time, or actually should see it here on the other screen as well. Yeah, so that looks okay-ish or promising enough. So first things first, need to create that new affiliate link. So where is now SQL? SQL is here. Okay. It's like I had specific plans for the week. I mean, you guys know that as well. So not my plans, but like, so I had a few things that I wanted to get done, and then instead of being able to do those things, I now had like, yeah, like a gazillion other things come up. So log in with GameStop and other stuff. So manage account, go to affiliate dashboard. Okay, so where's my link? Oh, okay, to link to just append that. Okay, that I can do. Okay, so was waiting for your reply, lol. Yeah. Okay, so have a great day, Akashi. See you around. And again, good luck for your exam or with your exam. And then I need that daily market mastery there. Okay, so Emojipedia. I'm sure there's a book emoji. Yes, there is one. No, I don't care. Green book. That link. Boom. Yeah, let's go with the increasing chart icon for that. Copy. So it's going to be interesting to see if we move up from the $30 mark from here. As I said, I don't expect it. I mean, it's my opinion and not financial advice, of course, but I don't expect GameStop to close the bottom gap or to go down to the $20 mark again. So my options should actually all close for maximum profit, or I'm able to buy them back for $1 early. Call options on the other side, I would like to close for at least $1,000 profit per. It's actually not 1,000 profit if I sell them for 1,000 because I paid 120 for them. Yeah, but I would like to close those two for 800 profit each. Still holding my shares, of course. No, we have motive wave. There we go. Okay, so do we have that now? That's in there. Yeah, so that should be fine. So there. Bum, bum. Okay, okie Yeah, then I wanted to, where do I have that table here? I wanted to do that. Also now potentially do with a few things. Although I have to wait for my latest buy order to go through, if I recall it correctly. So when I originally joined ComputerShare, or registered my shares, I don't remember which service I used to buy some extra shares so that there is a US bank account linked with my ComputerShare account. And now I'm using Wise, and I basically have to make another small purchase at least, but I'm not sure how long it's going to take for that to go through, for the new bank account to be registered in quotes. So talking again about the caveats of using ComputerShare or having your shares directly registered, so that I can then set pending limit orders for selling shares. Like on one hand, I'd obviously would move or make my buy or my sell orders depending on the chart movement. On the other hand, I think it's going to be impossible to, if there is a huge explosion, so if the whole GameStop goes to the moon theory is correct, I think it's impossible to time the top. Therefore, I've set myself, I'm not going to share the exact numbers, but I've set myself a certain amount that if I get that out of my GameStop investments, then I'm happy because it's enough money to fund some other project. And so I might be one of the people that then ends up getting out early, although don't think so. Yeah. And therefore, I want to set the limit sell orders once they're possible. So again, ComputerShare is like the requirement. Like right now, okay, I don't see it right now, but it should be 600% at most above the current price. So if we're trading at 30, that would be, I'm really bad with math. Yeah. 30 times 7. So at 210 at most would be currently possible, which means I'm planning to sell, like, again, not sharing exact numbers, but just randomly, let's say one share at $100, and then one share at $250, and then one share at $500, and one share at, let's say, $750, one share at, let's say, $1,000, and so on. So up to a certain amount and with different numbers. So it's not one share and it's not at $100, but you get the idea. So that if we have a huge explosions, I'm selling minor amounts, so one share, 2 shares, blah blah blah, on the way up. If my guesstimate of where the top will be doesn't happen, then I still have a bunch of shares left that I could sell on any potential way down if I wanted to, or just hold to. And if we reach a specific price that I think might be possible, then I get exactly the amount out that I would like to get out of the whole trade thing, and still have then 10% of my shares left that I'm okay with holding long term. Yeah. But yeah, for that, as I said, I first have to wait for that sale order or buy order to go through. Then I have my new, because otherwise, if my banking information of my, in quotes, US account isn't available in ComputerShare, then the only way to get the payments would be in US dollar, as a check via mail, which wouldn't be an issue if it were not for my bank that charges for amounts that are above 12,500 euro, a 1% fee, maximum 150 euro per check that you want to redeem, and then the currency conversion fee and this and that. And I just can avoid all of that if I basically have that new US bank account verified in computer share and just send the payouts there. So anyway, so that's that. So did that. There's a yeah, like what a reply. Previous conversations. That and nothing that I can ignore from now. Another option, by the way, would be gonna check that real quick. If we to now we went through pretty much everything. So no. So and the other thing would be this one here. Another option would be that this is 1, 2, 3, 4, and we still have a push 5 down. Although then I would assume that we turn around at a 26.63 mark, plus minus a few points, and then go up from there. But overall, the nicer thing or the nicer scenario would be if that's our wave 4 done and we start to slowly build our wave 5. But then we can also check, like, basically, I mean, on the 1 minute chart, it's going to be hard. But the question will be if this turns into, or if these are 1, 2, 3, 4, 5 waves, A, B, C, and we get another push up, and then also still the option would be that this is 5 waves, 3 waves, 5 waves, which would be then a corrective pattern, and we get the push down before we get the push up. So yeah, I'm gonna just have to boringly watch the chart and see how this plays out. If this, however, would be in some case or in some kind already wave 1, 2, so wave 1 and now wave 2 down, then we would expect, as usual, wave 2 to turn around at the 38.2 retracement, most likely, not guaranteed, which would be at 30.26, and we went here to 30.31. So it's possible, I'm not saying guaranteed or so, but there is a probability there, certain, that this actually is the end of the correction, and this is the first wave 1, 2, and we go up from here. So again, like, that's just one of the many probabilities, but yeah, that's how I see it right now. So other than that, yeah, boring chart watch, or not boring, but yeah, chart watching continues. And I'm actually on the other side, quickly check. So I'm going to keep an eye on Twitter and on Reddit. If something's there, then I will share it in the stream as well. So. Somebody is trolling on Wall Street Bets and says, please stop talking about Berkshire. Wall Street Bets rules clearly state that only stocks above 500 million market capitalization are allowed to talk or to be talked about. And Berkshire clearly has a market capitalization around 260 million, which is way below the 500 million threshold. Yeah, so. That's how fast it can go. The cost to borrow for GameStop is still relatively low, so at around yeah, a little bit below 9%. Although today there were another 1.1 million shares that got borrowed to short. So. Maybe click on this. Yeah, it's not working the way you want. Yeah, I mean, but I'm live. Yeah. Yeah. Yeah.
And I want to Rex to 8 and nobody said that you just put out so many flows and automations.
Yeah, but that's the downside of affiliate marketing that you always rely on. Yeah, it's like I get that, yeah, but yeah, I get that, but it's just the other side of the coin. Yeah, so Deep Fucking Value is now the 5th biggest shareholder of GameStop with his 5 million shares. And that's not considering how many shares he could get if he exercises some or all of the options. Although to exercise all of the options, he would need right now, I think, $240 million. So he has 30 million in his account. So doesn't seem likely that he might exercise them all, but exercise them to cover. So he basically sells a couple of them or exercises and sells the shares to basically pay for the other shares. It's going to be interesting to see how that develops. But yeah, so no news on Berkshire that I can find or on the stock market. Uh, So Saxo, another weird broker, set GameStop apparently to close only. So just like it happened in 2021. So there's a post from 3 hours ago on Reddit. So it says this instrument has been set to reduce only. You can reduce or close your holdings, but not open new positions. But another guy says cannot confirm. Okay, never mind. So the guy that made the claim is watching the German ticker of GameStop. German market is closed now already. Should be closed now already. So, although, yeah, weird. So that's in quotes debunked. Uh, yeah. So, okay. Should be already closed or not. I mean, I'm never trading on the German market, but I think the what was it? G2S G2S2? No, like what's the ticker? GS2C, yeah. So that's on the German exchange. Maybe it's still open, yeah, but no, it looks 17, so closed 2 minutes ago, yeah. So or not. Still moving, huh? Oh, okay, appreciate the correction, yeah. So even though I'm living in Germany, I'm never checking the German exchanges or trading hours. So oh no, trading on extra takes place from Monday to Friday from 9 until 5:30 CET, so Central European time. Uh, at Börse Frankfurt, it says till 10, yeah. So 8 till 10, yeah. So, but I'm not sure on which one GameStop in Germany / Europe is listed. So, but either way, so like anyway, what matters is the main ticker, yeah. So, boom, boom, boom. Apparently on Bloomberg, they shared the Reddit post of deep fucking value that shows the position. Or Bloomberg. Yeah. Yeah, we can. Yeah. I think I'm going to call it a day. I mean, if there would be some sudden movement, so if we see this as 1, 2, 3, 4, 5, and we see the wave 3 develop, then I will come online again today. Other than that, I will call it a day, and we'll have another episode or live stream of Daily Market Mastery tomorrow. Yeah, like it's going to be interesting. I mean, like I mentioned last week already, I expect GameStop to go up and to certain levels, and this week some of that played out. Going to be interesting to see why what's the official explanation is going to be for the price dump in Berkshire and so on. And yeah, it's definitely going to be an interesting week and a cool month. Anyway, everyone, thanks for tuning in. Thanks, Olga, for participating and sharing a little bit, and for pointing me towards Berkshire and the other stocks. Like, I really would have missed it completely. Since I just actually yesterday cleaned out my watch list because it was getting so long that I didn't find the stocks I was looking for anymore. And yeah, anyway, so either see each other later, or at least I might be online later again if we see some strong movement. And other than that, you can see me then tomorrow. So yeah, see you soon, and good luck to everyone that's in GameStop. And if you're not in GameStop, good luck to your other investments. And until then, bye bye.